Now, question BL 1.8. Question BL 1.8. What is the annual finance cost saving if the management reduces the collection period to 60 days? What is the annual finance cost savings, or how much will the company save if they reduce the collection period to 60 days? And the management of XYZ company has annual credit sale of 20 million. Credit sale. Be careful because they say credit sale. So everything is in credit sales. Now, be careful because trade receivable only relates to credit sales. So when you go to the exam and they say sales, let's say 100 million for illustration purpose, or let's say 100,000, then they say 90% on credit, then please be able to distinguish the credit element from the cash element, because trade receivable only applies to the credit sales. So be very, very careful that you don't fall into the trap where they give you sales revenue and they tell you what percentage is on credit. So all your calculation must be based on the credit sales, because that is how come trade receivable. That is what gives trade receivables. So in this question, the examiner was quite forthright and clear that the annual credit sales is 20 million and account receivables of 4 million. So trade receivables is 4 million. Working capital is financed by an overdraft at 12% interest per year. And another area you should be very careful is that I say assume 365 days. So all your working should be based on 365 days. Often when you don't follow the instruction and you use 360 days or other days, you may get an answer which is wrong, but it is only because you were not disciplined to be able to follow the instructions as given in the question. So be mindful of information in your multiple choice questions so that you can do well. Now, if you have to find how much they will save when they reduce it to 60 days, to start with, what is the number of days currently and how much is it costing them? So that when they reduce to 60 days, how much will they cost them? So you can know how much they will save. So in a very simplistic way, the first thing is to find trade receivable days, or let me say find the current trade receivable days when you are not giving. Current trade receivable days if not given, or when it's not given. So in this question, we don't know the current trade receivable days, but we know that to find the trade receivable days is trade receivables 4 million over credit sales 20 million times 365 days. Now please use your calculator with me and find what answer we get. And we will then get here to be 73 days. So currently the trade receivable days, we have it to be 73 days. Now knowing the current trade receivable days, the question, or we will continue by finding what the cost of the current trade receivable days. So find current trade receivable days to find cost of your current trade receivables. So we have 20 million for 12% per annum. but we only need it for 73 out of 365 days. So our credit sales of 20 million is financed with an overdraft at the rate of 12%. But remember, we got 73 days, so the 12% per annum, we are not using 12% per annum, we are using it for only 73 out of 365 days. And when you solve this one, I think that it gives 480,000. Do it with your calculator. So you know the current trade receivable days and the current cost of your trade receivables. Please use your calculator to do all these things. Don't just follow me by listening. Practice makes perfect. So when you have done this one, the third thing, knowing how much is costing you currently, the third thing, I put a line there, is that you are going to find the revised trade receivable days if not given. But interestingly, the revised trade receivable days have been given to us, and in this question they gave it to us as 60 days because they are intending that they will reduce the trade receivable days to 60 days. So they have given us. If they have not given you, just find what the revised trade receivable days are on the average. 4, you find costs of revised trade receivable days. Just like we did earlier, if the credit sale is still 20 million, as in this question, it is still 20 million and it is financed with the same overdraft. If that is the case, it's financed with the same overdraft of 12% per annum. But remember, we only need it for 60 days out of 365 days. Please do this one. Let's see. So we have 20 million at 12%. And for 60 days out of 365 days. And I'm getting an answer which is 394,520.5, so I can make it 521. So how much would we save? Originally it was 73 days. It cost us 480,000. And now we have reduced it to 60 days and it is costing 394,521. The difference, 480,000 less 394,521 is how much we are going to save. And I think it gives us 85,479, and that gives us the answer to be A. Please ensure you have gone through this thoroughly. You find the current trade receivable days if you are not given by using trade receivable over credit sales times 365 or whatever annual number of days they give you. Then you find the cost of your current trade receivable. 20 million you sell on credit. You finance it with an overdraft at 12% per annum. But remember, you only need it for 73 out of 365. So don't forget that you only needed it for 73 over 365 days. Having done the current trade receivable and the cost of the current trade receivable, you go on to find the revised trade receivable, and then the cost of the revised trade receivables. The difference gives you savings